Assalamu alaikum friends, welcome to SBR revision series for September 2021, and today we are going to cover a small standard IFRS 11, but this is equally important for group accounting also. Okay, so in joint arrangements, okay, first, okay, let us not come to joint operation or joint venture. Before that, joint arrangement, first you have to see whether in the scenario given to you there is any joint arrangement. For that, you have to know the definition, and this definition has two keywords. One, arrangement should have two or more parties that have joint control. No single person is having the control. If one person is only controlling, that is not called joint control. To have joint control, it has to be more than two or more than two. It could be two, three, four, anything. But they together should have joint control. Then only it's known as joint arrangement. You have to see for this in your scenario given to you whether more than two parties are having joint control or not. Number two, whether for any decision unanimous consent is taken from the parties or not that are sharing the control. Okay, for any decision you have to see whether unanimous consent is there or not of all the parties. So these two things has to be there for it to be joint arrangements. More than two parties having joint control and unanimous consent of all the parties for the decision making. If these two are there, if it is identified as joint arrangement, next then we are going to the next step. The next step is to define whether it comes as a joint operation or a joint venture. So joint arrangements can come into two things, can fall into two categories. One is joint operation, the other one is joint venture, and there's a slight difference between these two. It's not the same thing. The way you account for it is different, also the definition is different. First, let us start the joint operation. Okay, so joint operation means ventures have rights to assets and obligations of the arrangement. Okay, the difference with joint venture is joint venture also have a right but to net assets. Joint operation assets and obligation, joint venture net asset. Another difference is joint operation they are not normally a separate entity, but joint venture they are normally a separate entity. So these are the two differences, key differences between joint operation and joint venture. You should know. Okay, next, if it's joint operation, how do you account for it? If it's joint venture, how do you account for it? If it's joint operation, okay, you take their share of all the assets, liabilities, income and expense. Take their share. Okay, if it's joint venture, you have to use IS 28, the one which you used for associate, that is known as equity method. Okay, the same thing we have used for associate also under IS 28. That means you have to apply IS 28. Okay, even though this joint venture falls under IFRS 11 under joint arrangement, but when you account for joint venture, you'll be using equity method, right? So that equity method is under IS 28, the same way we have done for associates. Okay, if you are confused what is equity account and how do you start, you have to go back and check IS 28 how we have done for associate. So the same way there it was associate, now it will be same but joint venture in the name of joint venture. Okay, so be very careful in your exam whether it's a joint operation or joint venture, because if you have identified it incorrectly, then everything goes wrong. Everything goes wrong. So there's a slight difference you have to see. Okay, if you cannot understand from the assets, net asset, assets and obligation, then at least see whether they have a separate entity or not. If it's a separate entity, joint venture. If not, joint operation. Okay, so that's it for joint arrangement. Okay, before I end this video, let me summarize what I've discussed. Before anything, first identify whether it's a joint arrangement or not. Once you have identified, how do you identify whether it's a joint arrangement or not? By the two definition. Two or more parties having joint control and unanimous consent. If these two are satisfied, it's a joint arrangement. Joint operation falls into two, joint operation and joint venture. Then you see which definition is more suitable. Then if it's joint operation, take their share. If it's joint venture, IS 28 equity method. Okay, so that's it for joint arrangements that you have to know. And next we are going to cover is IFRS 12. Very small, I think this is the smallest standard you will ever see, right? That is disclosure in other entities. So till then, thanks for watching and see you in the next video.